Gold so far for the day achieved 1865 and then since then has traded bearish and now it has come to its first support levels at 1855. In the Asia session update today, I have asked you to sell at 1860 and first support at 1854.55. It is already achieved. While US crude has been trading in very modest and a narrow zone, you can say. It failed to stay above 85.5 and on the downside 84 levels again proven out to be good support. So what to expect from gold and crude oil today? We will see with the help of charts and indicators. Let's start first with look into gold followed with crude oil. Watch till the end and yes, if you appreciate the effort, do press the like button, do share, subscribe and comment as this is a second update for the day. In order to remain updated, you can join my free telegram channel or press the bell icon. Links are mentioned in the channel and video description. Let's have a look at the hourly chart. See, resistance at 60 was the first support level. It has breached 60 and directly came to the first support levels at 1854.55. In the morning update, we have seen these are going to remain a good support level. In fact, now below 54, I will wait for it to break past 52.50 zone. This is going to be the maximum support zone. Only and only if you see gold is staying below 1850, further bearishness is going to be seen. Stochastic at bottom, MACD is divergent and bearish, it is looking downwards. RSI is also staying bearish, looking downwards here. Coming to 2 hour, on the 2 hour chart, you can see it has come to the support levels. The previous two here has got a double top here, which suggests that price is getting good resistance at 1860, and once it stays above 1860, possibly the bullishness may be seen here. And hence now above 1860, we can initiate a buying position. Now, what is happening here is the moving average has come up as we discussed in the earlier update today that what that prices may retrace slowly because there is too much of divergence from the moving average, and that is what has happened. It is waited for the moving average to come up. Now 50 to 50 zone is going to remain the greater support here. The stochastic at bottom, MACD has just crossed over, trading with divergence and bearishness, and this crossover is coming at a slightly higher levels and hence it can retrace a little on the downside. RSI looking downwards, trying to stay bearish. Coming to 3 hour. Now on the 3 hour charts, yes, moving averages have crossed over the 20 and 50 period moving average sitting at around 1850, 1845 levels, and the crossover here is a good sign for the bulls. What is happening right now is you can see the previous two candles with the double bottom. This candle has already achieved the lows, but at the same time, one must not forget that this candle has yielded a flat top and hence chances of a reversal also is there. But still, 1960 levels it has to break past by in order to confirm the rise. Also, too much of divergence from the moving average calls for a little retracement on the downside. If you look at the stochastic, this is looking downwards. The MACD is willing to converge crossover. Remember, it has not yet crossed over. And see, minus 15, it is just has seen plus 5, plus 10 zone. It can continue to diverge more from here. RSI was overbought. It has come out of the overbought zone. And if you look at 3 hour chart, 4 now look at 4 hour chart. The previous candle was almost double bottom and a swing candle was seen here. Yes, this candle also closed in green and almost at a flat note. Now look at this candle. It is achieved. It has started on a flat note and achieved lower lows, and thus once it stays above 1957 levels, you can expect that it might retrace towards 1860, and hence above 57 you can at least get 20-30 pips, but only bullish confirmation is if you see gold is staying above 1860 levels, beyond which a reversal is. If you look at a stochastic, this is looking downwards trying to trade bearish. The MACD is in green trying to converge. The RSI was overbought and that is why we can see a little drop here. Coming to the daily, now on the daily chart, see in the morning update we have seen that these two highs are beautifully aligned, the two lows are also beautifully aligned, and if you draw a median, the median is at around 1852 levels here. 1852.53 is going to be a great support zone. If the prices falls below 1852 levels, more bearishness towards 48 zone and then 44 levels can be expected. We may see a complete reversal and then it can try to fill the gap around 1830-35. At the same time, as long as 1852 levels are not breached, see it can reverse. Remember, the prices are still divergent from the 20 period moving average, which is sitting right now at around 68-70 zone, though it has gone very close to it, but it has not yet touched it or not yet breached it. At the same time, moving averages are trading with extreme divergence and hence a little retrace on the upside towards 1880 levels cannot be denied here. Staying above 1868-70, we may look forward to 1880 levels as well. stochastic overbought on the daily charts. MACD, now see why we can expect a bullish candle is look at the MACD. This is on the verge of a crossover. And this crossover is coming after a good bearish wave, and hence possible rise from here cannot be denied here. RSI is also coming out of the oversold levels here. So now I will recommend you to sell 1852 levels, beyond which you can expect little more bearishness. Below 1852, see, there are very good support. I cannot help but I have to share that 1850, 1848, 1844, 45. These three are major support levels, and below that you can expect it to bridge the gap towards 1840, 1835. At the same time, right now, say 1857, yes, we can initiate a buying position, but with the caution that it is only above 1860. It can try to retest towards 1860, and it is only above 1860. You can confirm that it is reversing, and then I will look forward to 1868, 1870 zone as the first target, and then directly it will lend towards 1880 levels as well. If not today, possibly by tomorrow. Take your positions accordingly. Now let's have a look at crude oil. And before we proceed, if you want to learn this art of trading, you should join my mentorship description. So join the 26th batch on starting on 16th of October. Only remember that the investment in your learning is what will reap you profits throughout your life, and thus equip yourself with the tools, techniques, and strategy which can help you become profitable trader. Reach out to me for more details on my mentorship batch. My Telegram and email IDs are mentioned in the channel and video description. Now look at the hourly charts on crude oil. See, crude oil certainly 85.5 greater resistance. We have seen multiple candles failing to break past 85.5, and yet again, if you see price is staying above 85.5, just stay long. We are going to look at 86 levels. In fact, as I mentioned earlier, 85 levels, 85.2 you can buy, but then wait for it to break past 85.5 in order to confirm the rise. Now, what is happening right now? See the complete movement within the box here. It is not willing to break below 84, 83.8 zone, which is definitely a great support. And it is not willing to move up as well. What has happened? The moving averages have crossed over. The 20 and 100 also has crossed over, and this has become a very good support level. If you look at stochastic, this is looking downwards. MACD is trading bearish and divergent. RSI is also trading comfortable. Coming to 2. Now look at 2 hour charts. Double bottom has been formed. It has taken the support from the 20 period moving average, trying to rise. Possibly it may try to march towards 85.5 and beyond levels. Remember, beyond 85.5, more bullishness may prevail here. Stochastic rising. MACD on the other hand is almost flat. It has just crossed over, but it is still staying close to zero levels, and hence these levels are to be watched carefully. RSI trading comfortable near to the top there. Coming to 3 hour. Now see on the 3 hour charts, previous two candle were a swing candle. This candle has already formed a double bottom. It can also try to rise from here on the upside. There is a very strong probability to it. If you just connect the lows here, you will find that on the downside, the 20 period moving average is giving it a very good support. Right now sitting at around 84.3. And that is why I say as long as 83.8 levels are not breached, do not treat oil as bearish. Even if you see below 83.8, you can expect 83.5, 83 and 82.4 as the major support levels here, and then it will complete the gap filling exercise towards 82. Stochastic has dropped. MACD is willing to converge here. It is still in green. RSI is staying flat. Coming to 4 hour. Now look at 4 hour chart. See higher lows, yes, and lower highs or flat bottom is what you can see. It is just trying to consolidate above 85.5 and below 83.8 is where the direction of the oil is. Beyond 85.5, stay bullish. It is going to break towards 86 and plus levels. Yes, the prices were divergent from the moving average. Now moving average has started to converge. There is a gap which needs to be filled. Maybe it will fill in the later stage. Stochastic has dropped. MACD is in green. It is trying to trade with divergence and bullishness. RSI is also looking upwards. Coming to the daily. Now, if you look at daily charts, see the lows are beautifully aligned. The flat top is seen. This could be one of the squeeze which it is trying to create. Beyond 85.5, certainly we can see more bullish momentum. Remember, on the daily charts, the moving average is sitting far above it, around 86, 87 levels. These are good resistance. I have always maintained for oil previously when it was above $90 levels, 87.6 and 88 were the two critical support levels. Now these are going to remain the resistance levels. So first is, see, this was the breakout, and hence 85.886 is a good resistance zone. Then you can look forward to 87.6 and 88 as the next milestone, which is definitely going to provide a critical resistance for oil on the upside. Stochastic is rising here. The MACD is staying bearish and see the candle size is diminishing. Possibly either it may consolidate or we may see it converging and crossing over for a buying position. RSI has dropped and now trading comfortable. So looking, I recommend you to buy oil only if you see it staying above 85 levels. And if you are buying at 85, be with caution, be extra cautious, be alert that 85.5 is what it needs to break past by. Beyond 85.5, certainly more bullish momentum. This time may take it above 87, 86.5 and 87 levels as well. And hence you have to trade with caution. Or at the same time, on the downside, you can sell here at 84.5 level. This price has to be below 84.5. This is a slightly riskier trade because 83.8 is what we have to wait for it to break past by. As long as 83.8 is not breached, there are greater support somewhere here at around 84.3 is also one good support. Then 83.8, 84 is definitely a very good support, and only below 83.8 is where the bears will take over. So take your trades accordingly, trade with a stop loss and a trailing stop. Do like, share, subscribe, and comment. Join my mentorship batch and signals channel. Reach out to me for any of your trading or trading queries. My Telegram and email IDs are mentioned in the channel and video description. Thank you very much. Do press the like button before leaving the video. Do share, subscribe, and comment as well. Thank you.